I'll try and do so. Okay, so very, very quick introduction. Who is EPAM and why are we hosting this event? So we are a global software product development and digital platform development leader. We spend a lot of our time working in the financial services industry, and we've been doing thinking and ideation around how the future of banking might evolve, looking at trends in the market today. Based on that, we decided to commission the report and try and gain some actual customer insights to inform our further sort of development of our thinking. We have around 40,000 people globally and are engaged in all of the major regions. Looking at the report itself, we wanted to focus on major banking regions, looking at Hong Kong and Singapore, United Kingdom and the US. We engaged about 4,500 participants across each of these regions, and in partnership with Truology, we've done some fairly detailed analysis of all of the responses, identifying segments and analyzing the variations across the regions, and that's what we're going to explore today, focusing mainly on the data for the United Kingdom. In summary, what the report has told us is, in my view, quite interesting. The standout figure that you can see on the top left there is that 82% of our respondents are happy or very happy with their bank. Only 4% are slightly unhappy, and a tiny 1% extremely unhappy. So given a lot of the media attention that's being paid to the banking environment at the moment, and the threat of disruption and the rise of neobanks and challengers, we thought this was quite an interesting statistic. Looking at the number just below that, we see that only 3% of our respondents are using a neobank as their sole bank, and that having said that, in spite of these figures, though, 40% of the respondents were open to innovation in the 18 to 44-year-old category. So there seems a little bit of a disconnect here, and we are interested to explore why that might be the case. What we found as well is that when choosing their primary account, trust is a major decision factor. So 63% of participants have chosen their primary bank account or stuck with their bank account on the basis of trust of the incumbent banking provider. With the pandemic and the impact of the COVID situation, our respondents have also, 50% of them have said that they've reassessed their needs as a result of the pandemic. However, we haven't seen that leading through into any change in behavior from our participants, from our respondents yet. So that's also an interesting fact. And then it was clear that while some of the region's respondents were not really strongly attached to physical branches, there was still a high level of support for physical branches in other regions. So pretty much a 50-50 split there. And even having said that, we can't discount the role of branches. There's still a strong minority within each region that really values having access to physical branches. So we'd like to think about what that means as well for the future of banking. And then throughout this all, the conclusions that we draw highlight that despite the innovations that we're seeing in financial services, fundamental drivers of banking customers remain largely unchanged. So we're looking at what might be needed to really initiate change and move some of these statistics, and that's what we're going to explore in this session now. Just a quick word on the consumers that would consider switching, and there was a fairly strong proportion, in spite of 82% of consumers saying that they're happy with their bank, there was a strong around 40% or so who would still consider switching. So that's also an interesting number in itself. Of those who were thinking about switching, the primary drivers for this were better benefits, and by this we mean financial benefits for customers. So whether it's sign-on fees or better rates or cashback or bundled products, these are the factors that are the main cause of switching behavior, along with very close behind it, hassle-free changing. So the friction around shifting your entire banking relationship is probably a disincentive or a deterrent when it comes to switching. The actual onboarding process and opening of an account is quite easy these days, but there are other factors that go into this. And then coming up in third place was better customer experience. Now, this is a little bit counterintuitive, especially given the focus of all banks, challengers and established, around the customer experience as a key factor, especially with the move to digital. But this was not the primary driver that was observed in our data. So I would like to explore that a little bit as well. I'm going to leave it there because the purpose of this is to really get the insights from our panel and the questions and answers at the end. And I don't want to spend too much time going into this, but if you haven't seen the report, please do take a look at that. It's available on epam.com. And of course, if you have any inquiries, please feel free to reach out to us. And with that said, welcome again to everybody. And Olivia, I'll hand over to you to continue with the panel.
Thanks, Panos. Good morning, everyone. Thank you for joining us this morning. My name is Olivia. I'm editor at FinTech Alliance, which is the government-backed digital ecosystem bringing together all different facets of UK FinTech. So that's why I'm particularly interested in this report and how it looks at banks, neobanks, and also the potential for technology innovation from other businesses too. So thanks, Panos, for your outline of the report. I think it does make a really interesting read. And it presents kind of the challenges there for the incumbents, but also the neobanks, even in terms of keeping up with consumers. Consumers' needs seem to be changing every day at the moment, especially now. So I hope that EPAM kind of continues to research this on a regular basis, help us all keep on top of it. I hope that a variety of speakers today will be able to help us sort of untangle where we are now and what this means for the coming months and years, as well as hoping to look at what banking might look like in the future. Before we begin, just a note, obviously I will be asking the questions, but please remember the Q&A function here on Zoom, and we'll try and get through as many audience questions as we can at the end. But first of all, I'd like to ask the rest of the panel to introduce themselves. Obviously you've heard from Panos, so we'll just start with Rachel.
Yep, sure. Thank you, Olivia. So I'm Rachel Bimby. I'm a product manager who specialises in conversational AI here at EPAM. I've got over 10 years experience in retail banking. And my most recent role up until the end of last year was managing the customer-facing AI programme at RBS, which is now rebranded as NatWest Group, where I successfully launched their conversational AI Cora.
That's great. And Vincent, could we hear from you, please?
Yeah, good morning, everybody. My name is Vincent McElwain. I work in AIB. I'm currently responsible for channel modernization, bit of a mouthful. I've been 6 years in the retail banking sector in technology. Prior to that, I worked in aviation and in the airline industry. I've had a number of roles in AIB, from digital architecture into more of a delivery focus now in the last couple of years, bringing new changes into our personal banking channels, mobile banking, internet banking, etc. So that's me.
And Travis?
Morning, everybody. So Travis Walker, Chief Commercial Officer at Thought Machine. So company I've been with 4 years, a company that's 6 years old, specialises in next generation core banking technology. Prior to that, a couple of years at Fiserv, and then before that, nearly a decade at Barclays as managing the transactional banking, so current accounts in English, I guess. And before that, energy sector and a retailer.
Perfect. And finally, Atul.
Hi, Atul Chowdhury, Chief Commercial Officer at Monese. I've been with Monese for coming up to 2 years now. Prior to that, I've spent a lot of time in retail banking. I was one of the founders and Chief Commercial Officer of Ditto Bank in France. And prior to that, business strategy and business transformation.
That's great, thank you. So welcome everyone, and welcome to the audience as well. I think we'll get right into it with the first question, which is obviously going to be about COVID, as is on everyone's lips at the moment. But I think it's interesting, as Panos mentioned in the report, half of customers are reassessing their banking needs in response to COVID, but it's interesting to think about what this actually means. So does it mean that everyone's suddenly switching to a challenger bank? Not necessarily. But in the UK, we did have, I think, 6 million people downloaded their bank's app for the first time during the lockdown period. So I think people are kind of shifting the way they bank, at least. Vincent, it'd be interesting to hear from you how your customers' needs are kind of changing at AIB, and whether they are kind of moving around and reassessing, or whether they're sticking with what they know.
Yeah, absolutely. I think COVID has been a challenge for all our customers, whether they're personal banking customers or SMEs or bigger businesses, as you can imagine. We've had to fairly quickly introduce the payment break capability to our customers. So we're actually seeing a lot of our customers double down on that relationship they have with us right now. We're seeing massive increase in adoption of our mobile and digital experiences across the bank, and we're seeing much more usage as well. So we see on average our customers using the app 18 to 20 times a month on average, which is quite high. So yeah, our digital experience is very much at the fore, and we're seeing customers depend on us much more now because of COVID-19. And I think that's leading to a much more, less of people moving away from our traditional banking platform and sort of sticking with their traditional bank because of that trust factor.
Yeah, so a real opportunity there to show that you can be there for your customers when they need it most.
Yeah,
definitely. And Atul, from a kind of challenger perspective, as a kind of newer business that maybe hasn't built up those relationships for quite as long, what are the challenges and opportunities for you here?
Well, I think we've noticed, our customers, we classified them as city workers. The government classified them as key workers. So we've actually found that those people are earning more than they ever had. They spend, a lot of their employers have given them bigger bonuses this year. They're doing longer hours. So they've managed to create some wealth. And what we're working with them now is, how do we make sure that they have visibility of that wealth, and then now they spend it accurately. I think the big thing that we've noticed is we personally don't do any lending, and I think that's where some of the neobanks and the challengers have come unstuck, where regional banks are able to deploy capital much quicker than the neobanks have been able to. And right now, as we go into what people are classifying as the biggest recession in the last 40 years, I think it's going to be more and more essential that not only can we provide a digital banking experience and give people access to their money when they need it, but also support them when they don't have that money, and give them mechanisms to be able to manage that money further.
Definitely. And Rachel, you've a particular interest in the way customers interact with their bank, I suppose. So how do you think their expectations and needs are changing there, and especially now when they need to be able to interact on quite important things quite quickly?
Yeah, completely. So I think certainly as a customer, I want to be able to contact my bank as easily as possible. And during COVID, there was huge spikes in contact centres and long wait times to speak to someone, probably where people were feeling particularly anxious about not being able to make mortgage payments and things. So I definitely think that banks should make sure that they are more available in other channels that are maybe more convenient to customers and don't require you to call up and effectively have to manage an IVR to actually get through to speak to a human. So definitely think being available in channels that we speak to our friends and family in, things like WhatsApp, for example, or SMS, is definitely something that banks should be pushing just now to create that connection and actually be able to handle the volumes of inquiries that they've got at the moment.
Sure. And Travers, from your perspective, I suppose you're bridging the gap sometimes between the incumbent banks and the tech and fintech. It'd be interesting to hear if you've seen any particular success stories where people have really been there for their customers, or anything that maybe you think could have been done differently in hindsight.
Yeah, absolutely. And obviously, we don't have end consumers in the way banks do. Our customers are the banks themselves, of course. And I guess just a few observations on some of the comments. So, banks have seen a massive increase in the number of customers that have taken up digital channels, and they have had, a significant burden placed upon them in terms of, quickly switching on things like, the civils, business loans, or the payment breaks. we just heard from Rachel that actually some of that broke down in terms of the customer experience that was then delivered, not the execution of the, the breaks themselves, but just the access to them. And our observation generally is that this is resulted in banks having to look at the technology underneath the digital layers. So the digital layer, the channel is there, it's accessible, but the services that support it, so the flexibility in product design, the speed at which those products can be changed, whether or not those changes, so things like taking a payment break, can be exposed to a customer in a front-end channel without having to go through a contact center and an application process. Those types of technology deficiencies, shall we say, underneath the covers have caused banks some pain. So I guess our general observation is that banks are now looking much more robustly at the full architecture and technology stacks in order to serve real customers' needs into the future than perhaps they had done up until this point. So COVID, for us at least, has resulted in banks taking a more material look at their entire technology stack.
Definitely. And I want to kind of move on from COVID, but still obviously it's very important. But overall, we had in general 82% of people saying they were happy with their bank. And I don't want to get too abstract on a Wednesday morning, but it would be interesting to talk about what happiness actually means, I suppose. Panos, for you, is it that people are getting up every morning excited to do their banking, or does it just mean that they haven't had any big problems?
I think we've obviously spoken before about this, but yeah, absolutely. My view is, and obviously this isn't particularly tested by the data that we've got in our report, but the view is that people are not necessarily getting up in the morning and thinking, I must do banking today. So when they are saying they're happy with their bank, what we suspect is that it means they are getting everything they need at the moment. And even going back to the previous question on success stories during the pandemic, the fact that there hasn't been a massive amount of change of behavior means that beyond the obvious move to digital, it means that the banks have largely been there as necessary for their customers, and that's what's driving the statistic on happiness. The data that we have also shows that a large proportion are open to switching. So while they're happy, they're still open to a better offer. That means that they're not actively engaged and particularly supporting sticking with the bank that they have. They're open to other offers. So I think there's a nuance there, but it's still an important statistic and isn't driving switching behavior.
Definitely. And Vincent, in AIB, how do you measure happiness, or how do you measure the satisfaction of your customers?
Yeah, customer satisfaction. I suppose we do the normal things around NPS, and we have some insights from the data. But I guess, we've had to respond very quickly to our customers. I know we've kind of moved on from COVID a little bit, but, within a matter of weeks, we were able to offer a payment break capability to our customers, which at a time of crisis was, quite an emergency piece to get out the door for our customers. And we were able to turn that around in a couple of weeks through our mobile and internet banking channels. So, we've been really very much customer focused. We have, I suppose, constantly we customer test what we're propositioning out. And we take that feedback directly back into what we build and what we give to our customers. So we're very much engaged with our customers and being customer led about what we deliver. So we've probably had that focus for quite some time in the bank, very, very much about keeping things simple and providing a service that they can rely on. So our making sure our systems are available to our customers when they need them is really, really critical right now.
Sure. And if we're thinking about offering that kind of quick response and a frictionless experience, Travis, do you have any comments on kind of what friction is like at the moment and how banks and neobanks can kind of make sure they're maintaining that seamless experience for customers?
Yeah, I mean, so in general observations, I would consider happiness to be not dissatisfaction in this context. I don't know that customers yet know what the range of things that they should or could expect from banks in the future. But I think as we sit on the precipice of a complete migration into cloud infrastructure and the power that cloud infrastructure provides, and with the next generation of underlying technology, the range of services that could be available set to change fairly dramatically. And no criticism to Vincent or AIB, but a couple of weeks to add, and this was consistent across the entire industry, a couple of weeks to add a payment break it is, you know, by no doubt an exceptional outcome for the banking industry. But actually, if you look at it through a technology lens, that's an enormous amount of time. You know, if you look at what happened on, you know, these types of providers, so the Zooms and the Google Meets, when they went, okay, fine, we need to add the volumes of number of people that can actually access, you know, a single conference. That was a flick of a switch, you know, 24 hours type of. Now, it required some re-engineering underneath, but because of the, you know, the technology and the modern nature of it, the ability to change the underlying product on the fly whilst live was, you know, was available to them.
So I just wouldn't mind coming in there on that one. Just with regards to, you know, our ability to turn this stuff around, I think it was more to do with regulatory challenges and that type of thing. I think the technology was quite easy really when it came to it. It was more that we have, from a, you know, incumbent bank, we have a lot of regulatory challenges to get through from a credit perspective. So I don't think it was necessarily the technology.
And that sounds excellent from your perspective. But, you know, I am aware of banks that, you know, around the world, because this was a global challenge. I mean, you know, it wasn't just here in the UK. You know, we still know of banks that are manually addressing those payment breaks on an each customer basis in their system. So, you know, the deficiency, all I'm arguing for is the deficiency in systems means that, yes, things got done and the customers are to the 82% satisfied. They're not sufficiently dissatisfied in that the things got done that were required. But, you know, if it were different industries, the expectations from the consumers would have been much, much more enhanced than they are. And thus, I guess I'm arguing that the expectations of banking are lower than they otherwise should be.
Sure. And Atul, what does this mean for Monese, I guess, if people are just saying, well, I'm happy with my banking experience, I'm not desperate to switch over? What are the kind of challenges and how do you show that you're offering something a little bit different?
Yeah, I guess we're in a bit of a unique position from a challenger bank perspective because, you know, a lot of our customers are sort of new to country and underserved. But that again, you know, brings even more focus on serving those customers well. You know, we aren't in a lot of instances the secondary bank for our customer. We are the primary bank, and therefore, as a kind of new challenger, the importance of us being every transaction going through for that customer is important. So, you know, they don't have a NatWest card or an AIB card that they can turn back into if their Monese card doesn't work. So I think that presented, you know, its own challenges, and in terms of servicing, in terms of being able to respond to customers in time, we had to change our processes and you know, and enable more channels, enable more languages like we did historically, and work with our partners. So people like MasterCard, a big problem that, you know, most banks are facing now is, you know, people's flights are getting cancelled. There's so many more chargebacks, and when that happens to a customer, it's really frustrating. So they need to get in touch with someone. So I think that multi-channel approach of, you know, we don't have branches, but we do have the ability for someone to get in touch with us when they need to, whether that's through the app or whether that's through phone.
Mm-hmm. And I think as Vincent's kind of alluded to as well, you need to get these things up and running quickly, but you need to bear in mind, obviously, regulation. I think security as well would be a big issue, and making sure this happens in kind of robust way.
Yeah, we've seen similar trends across, you know, across Europe. Being pan-European, we've kind of seen the wave of COVID and customer transactions and the way that they've interacted with their banks follow a chain. So, you know, we saw transactions change in Italy, and then we saw the same thing happening in France, and then we saw the same type of customer contact then happening in the UK. So we're actually following the COVID wave and seeing how customers are acting in a particular region to then be able to build those processes in to serve them in the following regions when we know that the same process is going to happen again.
And should we be expecting more from our banking experience? Rachel, what are your views on that?
Yeah, I think definitely we should be, specifically in the conversational AI space. I would say that banks, banks in particular are sort of using that technology as a way just to reduce cost and deflect demand out of things like contact centres, when actually it can be really transformational if it's used right and really help to solve customer problems. And there was a really good example of that actually during the pandemic from Tide. So if you don't know Tide, they're a business fintech. They're aimed at small and medium-sized enterprises, but they actually very quickly spun up a chatbot which allowed their customers to answer a few questions and be told whether they were eligible for any government schemes or compensation as a result of COVID. So I think actually looking at how the technology can be used to help people is definitely what we should be expecting.
Definitely. And another part of the survey was in terms of using a neobank as your sole account. And I think a few years ago when we first heard of these challenges cropping up and people started using their Monzo cards and things, we wondered whether suddenly everyone would switch over to these accounts. But that hasn't really been the case. And is that indeed the goal of a neobank? Which is quite an interesting point. But Vincent, it'd be interesting to hear from yourself what you've seen as the impact over in Ireland. I know Revolut's kind of made a bit of a splash and a few others, but what's the impact been on the banking landscape?
Yep, there's a good bit in the press there recently around the numbers of Revolut accounts that have opened up in Ireland. So yeah, we've seen quite a growth in customers, moving money into their Revolut accounts. So we can keep an eye on that quite well. But I guess what we're not seeing is the actual the volumes of money going across. It's very much discretionary type spend. We haven't seen customers leave the bank. We have actually seen growth and adoption of our channels as opposed to the contrary. So yeah, we see them. They're a threat. They're offering some really good functionality and capability. They're keeping us on our toes, I guess, with regards to new features. I suppose we've been focused very much on the COVID piece for the first half of the year, but the latter half of this year, we have a lot of new exciting features to be released into our digital banking channels that I think kind of help us address some of those challenges from those fintech neobank kind of competitors. But yeah, look, they're there. Revolut is quite a good proposition, I guess, and we are seeing a number of our customers using it, but I don't think people are moving where they get paid into Revolut. They're sticking with their incumbent bank for that, particularly at this time. But I suppose they're going after the youth proposition as well. So, that's probably a new thing for us, in that people who tend to start at the bank stick with the bank. So, if they do grab that youth proposition, then maybe we'll have problems in the future.
Definitely. And Panos, from your perspective, Vincent's mentioned banks being kept on their toes, I suppose. So even if people aren't switching their account, they're expecting to be able to do lots of different things with it now that maybe they couldn't do a few years ago. What do you think the impact's going to be there?
Well, I think that, expecting, I think I would go back to what Travis said, which is that probably consumers by and large are not aware of what they're missing out on because they just don't know what technology could do for them. And I would probably divide this topic into, a short-term view on dealing with the pandemic and the economic situation of many consumers right now, and the responses of banks, with things like, payment holidays and these kinds of support measures, which are really building trust and enforcing the stickiness of customers to their current provider. And if we take a more medium to long-term view, as the technology starts to feed through and the new types of services assembling different, components and fintech providers from the cloud, as Travis mentioned, I think this will start to present very different types of services to consumers. Looking at the experience of the consumer, rather than offering a bank, you're offering some other kind of lifestyle service or support for the customer in their daily life. With the things they want to do. Once the first few offerings along these lines start to come out, people will then, the light bulb will come on and people will think, now I do expect more because I've seen what's possible. So I think there's going to be a short-term deal with what we have now in terms of the crisis situation, and longer term an evolution into a far more experience-driven banking service.
Sure. And as we move forward with customer expectations, Atul, what do you think the aim of a challenger bank or a fintech should be? I mean, I know Monese is slightly different because it does cater for those that don't have their account here. But do you think challengers should be trying to get that salary paid into them every month, or do you think it should be developing those other features that people enjoy using?
It depends on the business model of the challenger. So I think challengers there's two different types of challengers. There's the ones that are challenging the traditional banking business model. How can you get the most deposits and therefore lend out those deposits? And I think those people will have a very different way to encourage usage, and for them getting primary account status is extremely important. But I think if you look at what Revolut does, and to a certain degree what we do as well, what's important for us is actually share of wallet. So it's taking understanding every single transaction that our customer is making, and then working with the merchants or the resellers, make sure that we get value from each of those transactions, and so does our customer. And I think when we can start delivering that, and one of our customers knows that by using Monese, they're always going to get value, or they're always, they're never going to get ripped off. Then I think we can really start to see a transformation in the way that they use us, and therefore the amount of money that they service with us.
Sure, definitely. And Travis, from the Thought Machine perspective, it would be interesting to see where you see kind of the neobank and the bank going, and whether you see opportunities for partnerships or working together.
So I guess, a couple of observations. So, I mean, yes, I think inevitably there are partnerships to be had. I mean, I would just challenge the whole concept of a sole bank anyway. Although Vincent, I think, did quite rightly identify it as, where the salary is paid. And if that is the lens upon which we're determining sole bank, then people may well have their salary paid into a traditional bank. But the range of services that they may consume from other fintechs or financial institutions will broaden. And if you think about your other activity in life, your communications platforms, and okay, email may be a primary one, but you'll have an array of other messaging or communication platforms that you use for different purposes and different services, because they provide you a richness of experience that you value and utilize. So I think we probably just, as an industry, need to move away from the whole perception of a sole bank and start looking at it through the lens of the experience that's being provided by the provider, and what is the purpose of that experience, and what is the consumer benefit of it. And in that regard, yes, I see a big play for partnerships, and I see a big play for the technology evolutions that are going on, being deployed both into the incumbent players and into the new generation of the fintechs. And people building completely new propositions around them. And if we just take all of the component parts, technology, open banking, new experiences, partnerships with other industry types, and if we take just one of our challenger banks, built by Standard Chartered, Mox in Hong Kong, it's a joint venture. It's a joint venture between a telecommunications firm and a travel firm and a bank. And the combination of that set of accessibility to customers, accessibility to communications, and accessibility to the customer's lifestyle expectations around travel and so on, has created and is creating a richer experience than would otherwise have been the case. That's a combination of technology, different industry types coming together, and building a new generation of experiences.
Definitely, and I think it's really important to note that in fintech, we talk about all the different opportunities that we have and we can offer customers, and all the different ways we can innovate with technology. But I think the EPAM report has kind of brought us slightly back down to earth a little bit, in terms of the fact that the main reason for people to choose their primary bank account is still trust. Trust is this big factor, and it's also quite a complex thing. It's hard, again, like happiness, I suppose, it's hard to measure. It has often been seen as something that banks have over neobanks. They have those long-term relationships, perhaps through even generations of people. But how can they retain it, and how can neobanks gain this trust? I think an interesting point shown in the report as well was obviously the way people deal with their bank is changing. Phone calls are going down in popularity, which for anyone kind of my age and under will be not surprised by, because we hate talking on the phone, supposedly. But with branches closing as well, and with a lot of people in the UK saying, we don't feel the need for a branch, how do we maintain that human relationship and that trust as well? Rachel, what's your view on how banks can still have that conversation with people and build that trust?
Yeah, I think it's interesting, isn't it? I think definitely for some people, trust with your bank is still going to be synonymous with being able to pop into a branch, you know, or pick up the phone. You know, your money's not going to disappear overnight because you can see that physical location where they exist. But I did see quite an interesting stat which said that since 2015 we've lost 3,500 branches in the UK. So on average it's about 55 branches that shut every single month. So there's definitely a need to look at how we can create those human connections in other ways. And I think definitely things like voice assistants, chatbots, and even digital humans, which some banks are starting to use as well, are a great way to do that, because you can offer an experience that's actually 24/7, you know, it's personalized, it's quick and it's easy for customers, and it can be accessible in the channels that customers want to interact with. But if you're going to create that human connection, it's very easy to get it wrong when you're developing these. So good design is super important, and actually taking the time up front to develop the persona properly and create something that's going to resonate with your customers is the only way that that's going to be successful.
Yeah, I think definitely I've seen a few developments in bots being able to, I suppose, empathize with customers, rather than, you know, you don't want to come in angry at an experience and then have a robot smiling at you. I think that would frustrate people.
That's right. So there's sentiment analysis, and you can see with some of these digital humans, they can actually respond to customers' facial expressions as well. So if the customer looks worried, they can look worried. So that's sort of mirroring. I think it's a bit uncanny valley just now, but in the next few years, I think it will definitely take off. And
how do you think that banks and fintechs as well can kind of maintain their own brand through that? I guess if everyone's going to be speaking to a chatbot or using voice, how do you say, well, you know, this is AIB or this is Lloyds, for example?
Yeah, again, I think what's really important there is defining that persona and the tone of voice up front, and the UI and the UX. All of that is your brand identity. And actually, if you are developing a chatbot, for example, you have to work very closely with your brand and marketing team to make sure that it is reflective, because what you should be creating with these sort of assistants is a brand ambassador for your bank. You want something that's really representative and, like I say, resonates with customers. There's definitely banks out there at the moment that I've worked with who are going that extra step, you know, and actually creating things like branded voices for their voice assistants. And I think that's great because not only does it convey your brand, but also from a security perspective, customers love to know when they're talking to Google or Alexa versus when they're actually talking to their bank as well. And that's came through time and time again where we've done testing with some of these banks.
Yeah, definitely. And Atul, how do you build those relationships without any branches?
I mean, on the other side, you know, I was recently speaking to some colleagues about the concept of a dark bank. So the same way that you get, you know, you can get a Deliveroo from a kitchen that doesn't have any kind of real physical outlet. Now, are we coming to a time where you can do that with a bank or with the financial services, with open banking, integration? You have to see what's happening in Asia. Everyone's interacting through a different platform, whether that's through WeChat or whether that's through Alipay. But having the concept where, as long as a customer knows your value proposition, do you even need to have a customer experience that's dedicated? Can you rely on others to provide a great customer experience? And what you do is make sure the rails work. So it's a different concept. It's a new way of looking looking at it. But I think some of what's happening in technology, and certainly in partnerships and the type of people that we're speaking to, it makes that a very possible thing to do. In the short term, you know, we have lots of different ways that customers can have contact with us. But what we find is really, generally customer contact is when a customer has a problem. So, you know, rather than training our agents on how to solve that problem, what we generally do is speak to our product team about how do we make sure that customers don't have that type of problem again. And that is driven through the user experience driven through the information that's presented to them up front. So that whole proactive versus reactive approach.
And Vincent, obviously trust a big factor for AIB, and something I suppose you have very long-term relationships with customers and even families coming in, and as you said, kind of thinking about the youth market, you're used to having young people come in and set up their account, I suppose, if their parents know about the bank and things like that. How is that kind of changing in the past few years, and how is AIB maintaining the trust?
Yeah, I think a lot of what Rachel and Atul have said there kind of resonates well with me as well. While we have that branch relationship and we have had a traditional call center relationship with our customers, I suppose we're seeing more and more people want to move away from that, but still maintain that level of trust with the bank and that level of experience. So, you know, making sure our product works well, making sure the customer experience is simple, easy to use, but also providing a service that they can rely on, that's there when they need them, keeping things simple, always available. I suppose we want to be at the heart of our customers' financial lives, not just now in time of a crisis, but, you know, for the next generation as well. So, yeah, I think that we've got a few challenges there, a few gaps in our capability, particularly in that chat space. I think we could look at to address that. But I think, you know, we've lots of opportunities to maintain that trust for our customers over the next couple of years as well. So lots of new capability coming out shortly that will even more cement that relationship over time. I think keeping feature parity with some of the fintechs and neobanks is important as well, because, you know, customers are used to using some of these other platforms now, and we have to offer similar experiences. So we have to maintain that relationship over time.
Definitely. And the final thing I want to kind of mention looking forward is how can banks and neobanks build this sustainable model that's going to work in the future with the consumer needs we've found in the report in mind. Vincent, I suppose we'll stick with you there. What are your views on kind of partnering with tech companies and fintechs to enhance AIB's offering?
Yeah, I think that's a big theme for us right now. You know, how do we partner effectively, not just in how we build capability, but how we offer capability very quickly to our customers. And I guess, you know, even going back to one of the points Travis made earlier on, you know, partnering effectively, but able to sort of leverage other platforms and other capability very quickly is an important way to turn features out to customers in a quick space. And I think that ability to react quickly to our customer needs is very, very important. A lot of the groundwork we've done over the last couple of years in our strategic technical architecture allows us to engage more quickly with partnerships through identity, etc., open banking, and all those types of things we've been working on heavily for the last couple of years, really open up the landscape for us going forward. And I think that'll, you know, we'll increasingly partner with, you know, not just engineering platforms, but our engineering companies to build out this capability ourselves, but also with third parties to help bring capability fast to our customers.
Okay. And what are the kind of some of the challenges and sticking points going to be when we try and see these partnerships? Travis, you might have a experience of that already.
Well, yeah. I guess banks historically have done things, you know, their own way for themselves, within themselves. So, you know, there's an organizational, you know, there's a change in how the banks need to organize themselves in order to properly address the opportunities of partnership. But equally, we're also starting to see it the other way around. So we're seeing quite a lot of banks coming to us and saying, okay, could your technology, so Thought Machine's technology, enable us to provide a wider banking as a service to a cohort of, and back to Atel's point around the the dark bank, a term I hadn't heard before, by the way. So I don't know if you guys made it up or whether or not it's just now coming into the lexicon, but that whole kind of, you know, providing banking as a service to a wider range of partners, as well as the inbound stuff, which Vincent was talking about in terms of, you know, open banking and vendor participation in it and so on. So I think this is a two-way street. I think, you know, the incumbents are both going to partner up with technology vendors to enhance the experience they're giving their customers. But I also see that they're going to go the other way and provide that wider banking service to a larger array of, you know, potential businesses out to their end consumers, and that's going to end up being, you know, a version of a symbiotic set of relationships, all of which, of course, rely upon, you know, high-grade next-generation technology being seamlessly integrated together.
Okay, and I think finally we have a couple of audience questions, but I wanted to go around the panel and just ask what you feel like the bank of the future will look like, I suppose. I know it's quite a wide question, but Travis, you mentioned kind of banking as a service and what that model will look like. So it'd be interesting to hear people's thoughts on what could work as a solution for consumer needs at the moment. Panos, so maybe you could give us an insight from the report as to what direction you feel it's moving.
Yeah, sure. I think the report specifically highlights innovation around the channels and the interaction models as a as a key area for for consumer expectations. Those are things that consumers are familiar with already from other digital experiences that they have, whether it's chatting via social media platforms or interacting with home speakers and voice assistants. I think those things are going to become far more relevant for the banking experience in future, and taking the bank away as a destination and providing the banking services in the place where they are consumed and needed by the customer. So I think there's going to be a shift in that direction. At the same time, there's going to, we're going to see fragmentation and a network of partners and service providers collaborating to provide holistic services to consumers. The experience and the things that they want to do will be front and center, and the banking support and the financial services that are required will be maybe a little bit more hidden. There will be impact also on topics like security and identity management, data, because the more of a network you have, an integration of different platforms, the more chance there is for things to go wrong, and that's going to be a very important factor also in maintaining trust.
Atul, you talked about a dark model. What do you think that will be? What we'll be experiencing in the future, and if so, how will people maintain, as Panos says, their brand and trust?
So I definitely think that that's happening already. You're starting to see it happening in the telecoms industry, where eSIMs have come out. Will the sort of traditional telecoms providers just turn into a network to provide data? I think you'll find the same happening with traditional financial services, or at least the transaction part of banking. But I think it will be predominantly led by partnerships. Again, it's not what people want is an integrated service. And when you start thinking about some of those macroeconomic trends that are coming towards us, we've got the future of work, where people are going to be working, for different companies in different countries, earning in different currencies. They want that kind of seamless experience. And then the Internet of Things, where suddenly your car's going to be able to pay for its parking itself and earn you money and everything, and having your banking service or your transaction service that is working alongside these tools and services to give you an optimized experience. So really, you don't need to think about needing money or spending money. I think that's where the future of banking is going to go.
Okay. And Travis, from your point of view, when you're helping these organizations obviously transform, where do you see that going?
If only you could predict all the versions of the future that could exist. I mean, I guess my overarching view is we sit at a pretty exciting time in the industry. There's the famous quote that we need banking, not banks, which I don't agree with. We do need banks, but they need to make the banking accessible in the places upon which we want it accessible. And that is a combination of partnerships, new generation products being created. There is clearly a paradigm shift in terms of where people are consuming their banking services and how they require those banking services to be integrated into other services. And there is a paradigm shift in terms of the data and the algorithms that can be applied to those services. So you think about things like transactional analysis, which help me with my spend behavior. If you think about Rachel's point in terms of the bot experience and how I'm communicating with the bank. And if we think about the underlying product architecture, things like payment holidays has been a great example of, we had to do it because of the pandemic, but actually, there's good reason why people would want those, as a flexible component in an underlying product in our day-to-day lives. I'd like not to pay my loan over the Christmas period, or I'm going to go on holiday this month instead of. Can I have flexibility in my product, please? Not forced flexibility, but designed flexibility in those products. So if you take all of those component parts, I think we should just be really excited by the opportunities that are going to be available to all. And whether or not one bank decides to go down a dark bank model, to use the piece in here, and provide banking as a service to a range of external providers, or whether or not it wants to go double down on the new experiences it's going to create for its customers, that's a strategic choice for that institution. Both would be perfectly credible business models moving forward.
Sure. And Vincent, what's your view on the business model of the future, or what you'd like to see?
Yeah, I think there is definitely an exciting couple of years ahead of us. I think there'll be a degree of consolidation in the market, to be honest, but I do believe that partnering effectively is a real key strategic piece to get right. I think that really opens up the door to the art of the possible for our customers. I think themes like personalization and a few things like that are going to come to the fore as well. And be able to engage with our customers in a very personal way to maintain that level of trust going forward. I do think the role of the branches will still play a significant part, but yes, increasingly people will be wanting to interact with their banks in a much more digital way going forward, and that trend will continue, I believe. So yeah, look, I think the future is very, very bright in that space, and an exciting time ahead for everybody.
That's great. And Rachel, finally, your prediction.
I'll keep it brief so we've got time for some questions as well. So yeah, I just really agree with what's been said so far. I think specifically for banks, what we'll end up with is like an ecosystem of service providers and partnerships. And we're even seeing a lot of that happening already, even with fintechs as well, specifically Revolut getting into the travel space, offering airport lounge passes for their customers, I think is great. And Monese with their partnership with OVO as well to facilitate energy switching. So I think we'll see lots more of that.
Perfect, thank you. And just so everyone knows, we'll be replaying this in a few years' time, and whoever was right maybe gets an EPAM mug or some other prize. So it'll be interesting to look back. But we've got a couple of audience questions now, and one is around AI and chatbots. So Rachel, probably for yourself. Someone says, they seem like a no-brainer. This is from John, who said seamless integration and contextual help are obviously critical for customers. But what inputs are required to build that experience and to do it right? Does this require a full team, or what's your view on that?
Yeah, that's a really good question. So it definitely does require a full team, and it's very different skill sets in the team that you would require from doing some sort of web development or in-app development. You've got these new kinds of roles that have been created to facilitate things like conversation designers, for example, or conversation analysts. And just to put it in context, when I actually launched the chatbot program at RBS, I had a team of about 5 people to get the MVP over the line. If you fast forward about 12 months, I was managing a multidiscipline team of about 45, just to manage and maintain what was about 160 different intents or journeys for customers. But it was adding a lot of value. So it was doing 5.5 million conversations with customers every year. And I would definitely say that the hard work starts once you launch it as well. You have to optimize what's there alongside adding new stuff. Don't just leave it. That's bot rot, as I call it, and it's the worst thing possible. It will just decay over time.
Certainly. And someone else has asked, do customers really want chatbots? And I think that probably comes from experiences we've all had where we've been frustrated by a chatbot maybe not answering our question. So perhaps we don't want that, but do you think customers really do want to interact in that way if it's successful?
I think it all depends on the use case. There's certain things that are just easier to do on web. I'd never advocate for a chatbot for the sake of a chatbot. So it's really important before you build anything that you test as much as possible with customers and make sure that it is viable and it's actually improving things over the other experiences that they can go for.
Definitely. And finally, I just wanted to selfishly ask a question on behalf of FinTech Alliance. This is something we talk about a lot, work with a lot of fintechs and tech companies who are looking to partner with bigger banks. Vincent, it'd be interesting to know from yourself, what do you wish fintechs and tech companies knew about how a bank operates and how to partner and plug in their services there?
Yeah, I think we're increasingly looking to become more API driven. So I think when we look to partner with somebody, that's pretty much what we look at first from a technology perspective is, how integratable is it? How open is it? How scalable is that integration? So I suppose when somebody wants to partner with us, we're really, really key to look at their technology stack right now. Whereas before we probably were very much business led. Now we're quite technology and business led. So I guess if somebody comes to me looking to partner, I quickly get into that space with them to understand how that integration will work. So I'm being quite selfish there, looking from a purely technology perspective, but that's for me is the key piece.
That's great. Thank you very much for that. And those are all the questions that we have time for now, but I'm sure there'll be lots of content coming out in the future. And again, anyone who hasn't read the report, I would really urge you to do so. There's a lot of really useful takeaways from it. But for now, I just want to thank all the panelists, obviously Panos and Rachel from EPAM, Atul from Monese, Travers from Thought Machine, and Vincent from AIB. I think it's been a really interesting discussion, so thanks everyone, and thank you to the audience for tuning in and for your questions.
Thank you.
Thank you.
Thanks, Olivia.
Thank you, everyone.
Cheers. Bye.
Enjoy the rest of the day.
Thank you. Bye.